Hello everyone, and welcome to Next Vault. Today, we're tackling a crucial question: how to navigate an economic crisis. Whether it's a global recession, a financial downturn, or a local crisis, tough times can bring real financial stress. But don't worry, with the right preparation and strategies, you can not only survive but also seize opportunities that crises often present. Let's explore how to respond and protect your finances effectively. 1. Prepare your budget and limit expenses. The first step in navigating an economic crisis is to reassess your budget. In uncertain times, it's essential to know exactly where your money is going. This helps you make necessary adjustments before things become more challenging. Why is this important? An economic crisis might lead to a loss of income or rising living costs. By having a clear budget and closely monitoring your expenses, you'll be better prepared to react quickly. What should you do? Review all your monthly expenses and cut out non-essentials. Prioritize necessary spending, housing, food, and healthcare. Minimize entertainment and non-urgent purchases. Optimize subscriptions, streaming, magazines, etc., and cancel unused ones. Avoid taking on new debt during economic uncertainty. 2. Build an emergency fund. One of the keys to surviving an economic crisis is having an emergency fund. This acts as a financial cushion for unexpected events like job loss, illness, or unforeseen expenses. Why is this important? An economic downturn can bring layoffs, pay cuts, or situations requiring quick access to cash. Without an emergency fund, you might have to rely on debt to get through tough times. What should you do? Build an emergency fund equal to 3 to 6 months of essential expenses. This provides a buffer during difficult periods. Start small if needed. Save a portion of your income each month. Use high-yield savings accounts to grow your fund while keeping it accessible. 3. Diversify your income sources. When an economic crisis hits, losing your primary source of income can have immediate and dramatic consequences. Diversifying your income streams is one of the best ways to prepare for such uncertainties. Why is this important? If you depend on a single job or sector, a crisis can drastically reduce your income. Diversification helps you withstand disruptions to your main source of revenue. What should you do? Invest in passive income assets, real estate, dividend stocks, or interest-earning accounts. Start a side business or freelance in a field where you have expertise. Explore digital opportunities, online sales, content creation, or even cryptocurrency investments if you're comfortable with the risks. Contribute to retirement savings or long-term investments to establish additional financial safety nets. 4. Stay informed and keep learning. During an economic crisis, information becomes your greatest ally. Staying updated on the situation helps you make smart financial decisions. Why is this important? Crises often bring changes to laws, financial markets, and investment opportunities. Being well informed allows you to adapt your strategies or take advantage of emerging opportunities. What should you do? Follow economic news and market analysis regularly. Invest in financial education. Read books, attend courses, and consult experts. Join investment or finance groups to exchange strategies and ideas with others. 5. Invest wisely. Even during a crisis, many people hesitate to invest during an economic crisis. In reality, crises often present valuable investment opportunities, provided you choose your assets wisely. Why is this important? Economic downturns frequently result in undervalued assets, making it the ideal time to buy at lower prices, whether in stock markets or real estate. What should you do? Stay calm and avoid panic. Don't sell investments out of fear. Markets tend to recover over time. Focus on long-term investments. Avoid seeking quick gains and prioritize undervalued assets with long-term potential. Diversify your portfolio. Don't concentrate all your funds in one asset. Explore various asset types to mitigate risk. Conclusion: when facing an economic crisis, preparation is key. This means revisiting your finances, diversifying your income streams, and continuing to invest wisely while staying informed. While crises are challenging, they also provide an opportunity to strengthen your financial resilience for the long term. Thank you for watching this video. If you found these tips helpful, don't forget to subscribe to Next Vault for more content on crisis management, investing, and personal finance. See you soon on Next Vault.